Hello, Bay Area. Welcome to the Real Estate Playbook, your inside guide to the Bay Area housing scene. I'm your host, Nagaraj Annaiah, your local realtor. Today, we are joined by April Hell, a mortgage expert from a loan law, to dive into the latest mortgage updates. Just a reminder, I'm broadcasting live from Switzerland right now, but I'll be back in the Bay Area Saturday morning. Have questions? It's easy peasy. Call me at 858 880 4577 or visit nagarajhomes.com. Now, April, welcome to the show. What new things do you have for us on the mortgage front?
Thank you, Nagaraj. Actually, we're having a really good day in mortgage-backed securities. Inflation has really been our nemesis of late, and fortunately today we had some news that kind of turned down the market a little bit, and so
Mhm.
mortgage-backed securities really fighting to stay in a good position. So we've seen some rates go actually down today, which is extremely
Good.
good news.
Oh, that's good. That's a good news. Like, well, can you tell us, start with the more rates right now? How is it going on the rates altogether on this week? How is it fluctuating?
Yeah, so we've seen probably about a 1/4% fluctuation over the last week. So we're getting some of the rates back again.
Mhm.
30-year fixed are, somewhere in the neighborhood between 6 and 5/8 and 7%,
Mhm.
depending on rate structure and points. And our arms are at 6.25% for one of our 5/5 arms right now. So
Okay.
that hasn't fluctuated too
Not
much.
much, right? I think that's what I've seen about the credit unions. The rate doesn't fluctuate depending on the market conditions. If it's going in the high stuffs, also we don't see much fluctuations. It remains the same because I have the mortgage update from the Wells Fargo. The listeners, there are two kinds of. I think April, like let's touch upon on the confirming and the jumbo limits. Also, a lot of listeners might not be knowing what is confirming and the jumbos also, right? Especially for Santa Clara counties, anything more than 1.15 or a 1.18 are called as jumbo loans. Is that correct?
That's correct. Yeah, I think it's 1 million, and I don't even know it off the top of my head. Hold on while I
But that's fine. I think it's around when April is pulling the things, right?
one
Like
million 100. Hold on.
yeah, I think when
Yeah,
April is pulling it, I have the update from the Wells Fargo. Wells Fargo's rates are like for today's like see their confirming loan limits even if for 7 year interest rates are 6.875, 6.875. Discount points are 0.625. And like jumbo for 7 year are like 6.375. The discount points is 0.75. Discount points 0.75 means they need to be paying like 0.75% to get a 6.375, or basically they need to be moving for like that much of matching stocks or portfolios to that. And again, the APRs are like for 6.375 APRs or 7.319% for APR, right? And yeah, April, on the confirming, what was the things you were telling about that rates?
yeah. So it's conforming loan limit now for most of the counties in the Bay Area is $1,149,825. So
Oh,
that's pretty high nowadays.
yeah, I think but still,
Rates.
whatever that limit in Santa Clara, right? Like I was talking to one of the client recently, just now, before this meeting, I was talking to him. We can't get any homes for even for a 1.5. That is the hardest part, single family homes. Okay. The townhouse, I think I want to talk about the when people buying the townhouse, right, or condos. A lot of listeners have the confusion like a townhouse means like the land belongs to them or the land comes with the property. No, townhouses are similar to or same as a condos. Only thing is the way it is built. It is called a townhouse. Like basically nobody stays on the top or the bottom of the properties. So it's called a townhouses. Okay, but still it's a condo ownership. The all the condo ownership, especially when they're first time home buyers, right? Like April, what they need to be looking for when they're buying the condo properties.
So it depends on how much they're putting down, but typically one of the main things that comes up a lot is litigation.
Mhm.
Very common with HOAs, some sort of litigation, whether they're involving a contractor that they're suing for something, or So we do see that a lot. We do have options though, depending on what the litigation is, we do have options to go around that. So it's really helpful as a loan officer to really know what are those items up front, and then we can navigate around them.
Yeah, especially when they're buying HOA properties, they need to look about the litigations, because that time if the lender is not able to do it, and at the middle of the loan processing, if the loan doesn't go through it, it's very hard for them. So that is why upfront get the HOA disclosures, share it to the lenders so that lenders can review it. That's very important, right, April?
Yes, absolutely. And not only that, but since some years ago, there were
Mhm.
some condo complexes that were high rises that fell down in Florida and in some other areas. So one of the questions now on the questionnaire is, are there any problems with deferred maintenance and things like that? So any of those items that we know up front, if it doesn't pose a problem, we do have options for those and can still
Uh-huh.
move forward with that. But it's just really helpful to know up front what we're dealing with so we can help protect the buyer's earnest money if they're going to make an offer and make sure that everything goes smoothly.
No, especially that's what, like when you're putting in offers for HOA stuffs, like make sure are there any litigations. And I think the Florida one, whatever you brought in, it was very, very important. And one more thing is, like in HOA stuffs, when they're putting an offer, they need as a lender, do you care about the funds in the HOA, or like do you care about that? Like, is it?
In most cases, the way we structure everything, we're just going to need a limited review, which is just basically a condo questionnaire. So we won't need to get into their financials. We won't need all the HOA documents on our end on most of the loans that we do. There are certain types of loans, if you put lesser than 10% down, that may need documents. And in that case, then financials and such could be looked at. But we also have different loans for that as well.
Okay. Listeners, you're listening to Real Estate Playbook. Myself, Nagaraj Annaya, your own realtor. I'm conversing with April L, and we're discussing about the mortgage update scenarios. So one more question on the, especially when you're doing the HOA properties, right? Should we do you have any limitation about the 10% or a 20%, or like are you like even with a 10% would be able to help the buyers out there?
Oh yeah, we can help with less than 10%. So yeah. So depending on what the loan amount is. Now, if we're going into jumbo category, many times they're going to need to put the 10% down just because the way we structure the loan. But we do have options if it's a lesser, not too high of price, for lesser down payment options.
So the maximum up to 10% is like 2 million for the, even for the HOAs, or like how is it like up to
Yeah,
2?
we don't price anything different for the condos. So the condos and single family homes have exact same guidelines as far as rates and loan to value.
Okay. Listeners, you're listening to Real Estate Playbook. Myself, Nagaraj Anaya, and your own local realtor. I'm discussing with April L on the lot of scenarios for the HOA properties when they're considering to buy, and what they need to look for. Because a lot of, there's a misconception always, the townhouses or the condos, if land belongs to them, or like but you don't count the land stuff, right? Like if as a mortgage when you're doing it.
No, because the land isn't subdivided. So the appraiser looks at the legal and comes up with the price, obviously, as a condo.
Okay. And one more thing I need to discuss with you today on the appraisal front, right? A lot of buyers would have decided, because especially in the Bay Area now, what I'm noticing is the appraisal is coming lesser than the whatever the purchase price we are, like basically if it is like coming down as like lesser, what are the options they have? Can we touch upon on that, April?
Absolutely. So yeah, a lot of times when that if it does come in less, let's say they're going to put down 20%,
Mhm.
well, usually we can add on a second mortgage to supplement that so that they
Mhm.
can still bring in the same amount that they wanted. If they were coming in with 10%, then really the difference that they may have to bring in is only 10% of the difference between the purchase price and the loan amount. So they don't necessarily have to bring in the difference on that. We may be able to finance that and a little bit into the loan.
Yeah. So what does it mean is, like, for example, let's assume like you're buying about 2 million property, right? Like in the 2 million property, if it's if the appraisal has come out as a 1.1 1.90, that's an 100K less. In that case, for up to 1.190 or like 1.9 million, you can do a 10% down, and the remaining 100K you can do another loan, right?
Correct, correct.
So it is not, see, you should be prepared when your listeners, when you're especially buying properties in the Bay Area, right? You need to be prepared for the scenarios, because sometimes blindly we think all the properties goes for the higher value and put more than the. Recently I had one scenario, April, like where like we thought this property, this property is in the San Jose, South San Jose, and we expected it will go more than 50K more than the list price, right? Because the recent comparables was 1.35. But what what we should be carefully look when we're looking for the putting an offer, right? Like recent comparables, when you're looking on also, was this in a corner unit, right? It is like, is any upgrades are there? So that is why we should be very careful when we're putting in extra more than the last comparable sale, you are even close to the comparable sale. We thought it will go higher. No, it almost went into the uh, whatever the offer price, this 1.303 million is like basically our purchase the listed price was a 1.3 million, but we just put it for 3,000 more and we were able to get the property. So in that cases, right, like proper homework by the realtor and proper homework with the buyers matters, because there were some offers came in also. But when you have done the proper research on the properties what you're putting an offer, it really stands out. Listeners, I'm Nagaraj Anaya, your own realtor. I'm conversing with an April, and discussing on the lot of the mortgage scenarios happening in the real estate, especially in the Bay Area real estate, right? It's so tough. And especially like having an expert like April who can guide us in this tough scenarios is like matters, right? And so if you have any questions, you can reach out to April. April, you can give out your number. If the listeners have any questions, they can reach out to you after the show.
Yeah, best number 949-306-8100.
Thank you so much, listeners. Have a wonderful evening out there. And if you have any questions on the real estate, you can reach out to me on 858 or easy to remember. Go to nagrajhomes.com, click on a WhatsApp icon there, and you can easily connect to me. And any questions, I would be happy to help you out. Thank you and have a wonderful day there. Thank you so much, April.
Thank you very much. Have a good day.
Same to you.